Analysts at Zedcrest Wealth expect sentiments to remain mixed in Nigeria's equities markets this month as fixed income market rates are beginning to rise from the downtrend seen in the month of September. Meanwhile, they note a potential public or dual listing of Dangote Refinery on the NGX could be a game changer. Gbeminiyi Shopeju, investment research analyst at Zedcrest Wealth, joins me for more on this. Gbeminiyi, thank you so much for joining us today.
Thank you so much for having me, Esther.
Well, it's another month, trading month for investors, the first trading month for the month of October for investors. September was a bit mixed. We saw, of course, earnings driving some of them, a number of the gains that we saw in the market. But talk to us about your outlook for October. You're saying we're going to see mixed trading, of course, as investors focus on higher yields at the fixed income market. Yeah,
so I mean, like you have rightly said, in September we saw like there was a mixed sentiment in the market, and that's what we've been seeing like since the beginning of the year, due to the fact that there's been a lot of like profit taking and people like cherry picking the stocks at low prices and also taking profit from the stocks when they rally. So at September we also saw that fixed income yields started to drop in the primary market options, given the fact that the DMO was kind of giving like a more like they didn't want to take on that much risk anymore, so they started dropping yields. But we started seeing yields go back to the level that they were coming from before in the primary markets. So due to that, we expect investors to be shifting their focus from the equity market a little bit and be moving it into more fixed income securities so that they can pick high yield fixed income securities and then lock that down for the long term.
Now, for the typical portfolio managers, because it's, I mean, not just the end of the month, it's the beginning of a new trading month. We know that there's always that move around of stocks and outside of fixed income. Just let's talk about stocks for now. We know that some banking names, tier ones, tier twos, some maybe FCMB, Fidelity are typically favorites. Zenith Bank, Axis Bank. What would a typical portfolio look like for a month like this? Because some analysts have told us that look, much of the gains for 2024, we've seen that in Q1, Q2 already. So for the rest of the year, it's just going to be investors, like you said, cherry picking, being very intentional about the stocks that, about the names that they buy. But talk to us about what a typical portfolio would look like right now.
Okay, so right now, I would say that a typical portfolio would look like a more diverse portfolio. So there will be like a mix of banking, a mix of industrial goods. I mean, the companies that are doing well, oil and gas stocks, so that the stocks that we've seen rally all through the year, and we still expect them to rally. So given the fact that we're expecting earnings coming in Q3, that's coming soon, right? End of Q3. Right. So we should expect to see investors picking the stocks, like the banking, the oil and gas, industrial goods sector, so that they are able to like kind of stay on the good end when the earnings finally come.
I remember, you did talk about the consumer goods sector likely to see continued losses. Obviously, FX gains still are plaguing many of these players. You even say some are even at the risk of reporting negative shareholders' funds. You give the example of Nigerian breweries that had to float a rights issue. I mean, that's quite concerning for players in that sector. But talk to us. Is there light at the end of the tunnel for these players? I mean, throughout the year, we've talked about FX losses, FX pressure, etc. At what point, what are you seeing, what are they doing to get out of this hole?
Okay, so the thing with FX losses is given the fact that most of the FX losses came from like loans that, for example, Nigerian breweries, they had taken loans which had crystallized, like the FX losses kind of made them on the negative end of the FX loss situation. Right. So given the fact that we've seen a company like Nigerian breweries start floating a right issue just so that it still remains profitable, we should expect to see more companies come out and do similar corporate actions just so that they are able to like remain profitable and not necessarily report negative shareholders.
How appealing would that be to investors? Because we all know, I mean, at least the typical survey investor knows what the challenge is for a number of players in that sector and the sector as a whole is. So is that, I mean, how appealing would that be? Okay, so
I would say that the fact that these macroeconomic headwinds have been coming from last year, I feel like companies should have started rebalancing their strategies. So I think also Nestle has started rebalancing some of its strategies. They should look more into like backward integration and things like that, just so that they're able to like continuously make profit and not necessarily stay on the back end of making FX losses, because the demand for dollar and then the oil production, everything is still weighing on the dollar. So they need to focus on how they can make profits in the domestic economy, not just like looking at global economy and then going on from there.
And so far, the market has returned, I believe, just over 30%.
Yes.
How are we doing against our frontier emerging market peers? I know Ghana has done so far 39% this year. Where are we?
So right now, at the end of H1, I know that Nigeria was still one of the best performing equity markets in Africa, given the fact that, I mean, when we look at market capitalization and all those things, Nigeria still is like one of the top stock exchanges in Africa. So given the fact that Nigeria is still doing this much, like north of 30%, like you said, even with all these macroeconomic headwinds, I think Nigeria is still one of the top in our pairs.
Right, and talking about macroeconomic headwinds, we heard the president's speech yesterday, trying to, spur hope, acknowledging some of the headwinds and all of that. Are those the kind of things where investors pay attention to comments like that? How bullish are investors on the economy? I know that obviously some sectors, banking, industrial, oil and gas, have become somewhat of a safe haven for investors at a time like this. We're seeing gains in those sectors. But would you say that the market investors are bullish on the economy going forward? Did the comments yesterday do anything to move the market or encourage investors?
Okay, so I would say that investors are generally bullish with Nigerian equities for now, like in terms of like the banking names, because we've seen the banking recapitalization activity really take course. And even while there was that activity while the companies were doing that activity, we've been seeing FX reserves on the heightened trend. So we are still seeing that investors are still really looking into the Nigerian economy in terms of the equity side. On the banking names, that's what I would say on that.
All right. So for the rest of the week, today is Wednesday. Well, what stocks do you have on your radar? What stocks should we be looking out for?
I mean, we should be looking at some big banking tickers. We should be looking at First Bank. We should be looking at Zenith,
right?
Access and the likes.
All right. Gbeminiyi, thank you so much for talking to us today. Appreciate your time.
Thank you so much.
Gbeminiyi Shopeju, Investment Research Analyst at Zedcrest Wealth.